Yeah.
All right. Awesome. Thank you. You want to reshare your
Right.
screen?
So I'm going to go over here on SPY. We're going to go to our VWAP table. And one of the things that we discussed before was a volume burst. So this VWAP table shows minute by minute uh, price action and volume action. Um, and what we can do is look at any particular minute, if something unusual happens, and analyze it further. So up top here, we're looking for volume bursts, which are an unusual amount of trading activity for that particular minute for that time of day. All right. So when we look at um, trading volume, that it will fluctuate throughout the day. There's more trading activity, for example, in the first hour of trading than there is the second and third hour of trading. So we see a little bit of the the trading volume slow down in the middle of the day, and then the last hour of trading starts to tick up, and even the first couple minutes or last couple minutes, you also see a different volume profile, and this takes it into consideration based on time of day and what it's and the volume bursts are looking for an unusual uh, trading volume for that specific minute in a very short period of time. Um, and then we discussed it um, on prior videos. So besides the volume bursts, we could also look at the uh, the change in the price in a particular minute that seems unusual for that an unusual change from one VWAP price to the next, but it didn't have a lot of volume associated with that change. So it'd be like uh a moment of where the price moved with not a lot of liquidity. All right, so let's see what that looks like. And we refer to these as price fades. So I'm going to go over here. I'm going to click on these price fades, and I'm going to compare that to the 30-day average. So under here, there are price fades. So let's look at the 30-day average. Okay, now we have them side by side, and then we could go to the particular time where these occurred. So here we see that yesterday in SPY, there were 4 instances where the ask side faded higher. Okay. Um, and what happened was that there wasn't a lot of volume, to support this large fade. Okay, based on those historical benchmarks. Um, and sometimes we get those. We could compare them, like what do we usually see in on a day? And yesterday we had 4 of them, and typically we see around 5 of them. So that's nothing that unusual. Um, we did see though that the trading volume was about $1.3 billion worth of stock volume versus 537 million. So maybe that's a little bit different. Uh, this is where the VWAP price of all those trades were. So on those liquid jumps, on average, we saw that the trades happened around 529.36. Okay, if we took the volume weighted average price of all of them, and the average impact of that price fade was 32 cents. That's compared to typically 36 cents. So not as big of a price impact. And just to give you an analogy, what that would look like if we did it in the real world. Let's say you're you know your car dealer, and typically whatever you sell, maybe 1,000 cars a week, and for the prices to increase, you'd have to sell 2,000 cars, for them to increase whatever 5%, and for another 5%, it would increase by, you'd have to see 3,000 cars, demand to buy 3,000 cars for them to move the prices higher. And but what if you didn't see that type of demand, and all of a sudden the prices moved higher 10%, and but the demand to buy those cars didn't increase. We still saw 1,000 cars, people buying 1,000 cars that week, but all of a sudden you saw this unusual jump in price. Okay, so that would be like the dealers faded on the ask. Okay, so this is what we're looking. Why was there illiquidity on the ask side? So people pulled their offers. So those were 4 of them. Then on the buy side, we had the bids. Right, the bids are where they lowered their bids, and the prices moved down on the fade 5 times yesterday for $304 million worth of stock. The average price $528.97, and the average impact was 27 cents. So compare that to the 30-day. So nothing like really unusual, but we're just kind of going over what they look like. So let's go to a bid fade first. So C1 at 9:44, 11:33, 12:49. These are the 5 different bid fades that we saw yesterday. So let's click on the first one at 9:45. And here it is. So we could see here that on this particular minute, 9:45, you can see that the VWAP price dropped by 37 cents. Okay, so you could see that just comparing the ticks, right, the minute-to-minute ticks around it, that one will stick out, 37 cents. So I'm scrolling around. And here we go. That's 3.9 times more the movement in 1 minute than we usually see. But the dollar value of those trades were within range, right? When we talk about averages, we usually, we say, are they within that 1 standard deviation range? So it was still within 1 standard deviation range. So, and we did see why was there all of a sudden this liquidity drop where either the limit order book faded and people took their typical, orders and removed them or lowered their prices. The market makers that provide liquidity, the liquidity providers, all of a sudden pulled and lowered their bids. And so that happened yesterday over here in SPY on a bid fade. And over here, we could also see what's been going on around that time that may have explained it. And just looking at the market, I'm looking at, there's some ask fades here. There's a bid fade in multiple symbols at the same time in the S&P 500 stocks. There's another bid fade over here. Then we had the FOMC speaker at 9:55. So that could maybe explain it, because we did see some liquidity in other stocks. It could also be happening where there's another economic event. We have an FOMC speaker coming up, that creates uncertainties. So around that time, you might see people widening out their bids and offers, right? Just to say there's things going on here. There's an upcoming event, and you might see less liquidity, right? Because of that uncertainty. So that's what we look for. Was there maybe an explanation why there's a little bit less liquidity in the marketplace? So let's just keep looking at some of these other ones. One happened 11:30. Here's two of them. Let's look at these, 228, 230. So here we have a bid fade and a bid fade. And again, there is a lot of stuff also going on in the marketplace around that time that could explain it. So here we see there's a sell burst at 225. So this sell burst where there's an unusual amount of volume, trading volume in that minute, that resulted in the VWAP price of the stock to downtick by 26 cents. Then we saw over here a couple bid fades and another sell burst. So just over here, a general weakening in the market. And we do see sector ETFs here fading. So what this would do here, if you click on that, okay, so if we click on that, we could see that there's a sell burst, or I'm sorry, a price fade. There's a price fade in the industrial sector, energy sector, and material sector, all within that minute. Okay, so that could explain why we're getting this sell burst as well, that there's just a general weakness in the market. And again, we're looking at SPY, so this is a benchmark, and it's reacting to lots of things in the market. So I just wanted to go over what a bid fade or an ask fade would look like. So let's take a look at the ask fade here. 240. So on the ask side, what happened was over here at 240, we detected that all of a sudden the market from 239 to 244, you could see that the VWAP increased by 32 cents, which is an unusual, tick. Here we could see here that tick is 4 times greater than we usually see. You could see around here, we have 5-cent changes, a penny, 17 cents, 6 cents, 5 cents. So you could see here that 32 cents is a unusual tick from one minute to the next. All right. However, when we looked at the volume, that wasn't unusual. That's what we typically see. It's within range. So what we would call that is a fade on the offer, right? The markets faded their ask price, and the stocks just floated up without a volume burst. Okay, these are the number of stock that traded within that minute was within range, but the stock itself experienced illiquidity to the upside. However, there could be explanations because right around that time, lots of stuff was going on in the market, and then we could hover over here and we could see here that minute alone at 240. Here's what happened. There's a burst. There were 15 stocks that had a buy burst in the S&P 500, all simultaneously. So that happened at 240. There's also 50. I'm sorry, there's 50 stocks that also experienced a price fade at that time. And there are 6 sectors, 6 ETFs. So 6 of the S&P 500 sectors also had a price burst to the upside. Okay, so you could see here just that minute alone, it could explain why everything faded, because the stocks and the sectors within the S&P 500 were experiencing, those buy bursts. So that fade would make sense because these are all, related instruments. Okay, SPY would be pegged to what's going on with their components and sectors. So I think I'm going to stop there just to introduce the fades, because we usually talk about the volume bursts, but these are what the fades would look like.
Excellent job, Dima. Great tool. Chameleons are very thankful for it. Appreciate all the hard work. Thanks, buddy.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, Chameleons. Everyone have a great